Hi, I'm Alex. Welcome to the channel and thanks for tuning in. So in today's video, we're going to talk about Kodak. And I'm just going to leave this on screen for 1 second. Yes, this is the same Kodak that filed for bankruptcy. Yes, it's the same Kodak that tried to transition to a blockchain company during the crypto bubble. And yes, it's the same Kodak that in their May earnings this year reaffirmed their commitment to the print sector. But now, drumroll please, they've announced they're going into the generic pharma manufacturing sector. What's next? Last mile electric vehicles where they're guaranteed a massive government contract? Anyway, this video is going to focus on everything you need to know and why you should stay clear of Kodak, and why personally, I'm taking short positions and buying puts. Now, as part of this video, I'm also going to share with you how you can identify the next company to do a Kodak, i.e. from nowhere have their share price explode, and so that if you miss this one, you can get in and out very quickly and make a nice profit. So you're not going to want to miss that, so stick around. And for full disclosure here, I've never invested in Kodak. I was actually too busy doing my full-time investing job to notice what was going on in the market. However, next time I've got my alerts set up so when we see the next company going through this same parabolic share price growth, I'll be sure to try and get in on that action. So smash the like button, it's so helpful in pushing this channel to a wider audience. It's also quite helpful in improving the channel's like to dislike ratio, which unfortunately has taken a bit of a battering after a couple of videos I've made recently on popular stocks, calling out things which personally I don't believe justify the valuation that they're currently trading at. If you like investing related content, then subscribe to the channel, check out my old videos, and I've got loads of really exciting videos coming soon. And as always, I'm not a financial advisor, this video is purely for educational and entertainment purposes only. But let's get straight into it. Kodak's share price exploded on the news that they would be a recipient of a £765 million loan as part of the Defence Production Act, an act from the US government to finance onshoring and nearshoring of key products which the US needs. Now, the health crisis has identified to every country around the world its over-reliance on a global supply chain for key products. This loan's been provided so that Kodak can start manufacturing ingredients for generic drugs. Note here, they aren't making the drugs themselves, they're manufacturing some of the ingredients that go into those generic drugs. And that's important, and we'll come on to why in a minute. These ingredients will ultimately be sold to the manufacturers who are manufacturing those generic drugs. Now, the news got leaked into the market prematurely, and that was a result of a mistake where news releases were sent to journalists without the correct embargoes and restrictions, and ultimately it leaked to the market quite quickly. Trump then subsequently tweeted about it, and it all went a bit crazy. However, you do not want to buy Kodak shares at this valuation, and this is why. Number one, the risks around it being a going concern. In many of its recent earning reports, its auditors are questioning whether Kodak remains a going concern. And this is an accounting term that refers to whether a company can meet its financial obligations over the coming year and whether it can continue to operate as a company. In other words, the accountants are concerned that the business may not be around next year. Number two, this is a completely unproven strategy, and Kodak doesn't have the greatest track record for delivering on new strategies. In its May earnings presentation, Kodak reaffirmed its commitment to the print sector. And this just seems quite a quick, sudden U-turn from that. And historically, the company has tried to change its strategy quite dramatically, and it's never actually worked. The blockchain during the crypto bubble being a prime example of that. And ultimately, at this point in time, the company is still struggling financially. In this strategy, Kodak is going into something that it's completely unproven in. And what that means is even if they are successful in implementing this strategy, for a period of time, they're not going to be generating the same ROIs, the return on investments, the same margins, the same profitability that the established players also doing the same things will be generating. And that's so important to bear in mind, and we'll also touch on why that's so important in a second as well. Next up, it's a loan. It's not a grant, and there's also some risk to this as well. It's not guaranteed. There's still a degree of political risk around this, but I'm not going to go into this in too much detail here. Clearly, there's a strong argument and valid reasons for wanting to bring production of key things back to the US, nearshoring and onshoring, to decrease the US's reliance on other countries and international supply chains. And it also has formed a big part of Trump's agenda. However, there are political hurdles and political headwinds to this. At this point in time, we don't know much about the loan, we don't know any of the terms behind that, but what we do know is that it is a loan and it's not a grant. This means it will have to be paid back at some point in time, and ultimately that the company needs to be successful enough and generating enough cash to do that. Additionally, those funds have to be used for what is stated in the loan documentation, and in this example, it's establishing the manufacturing facilities for them to manufacture these pharmaceutical ingredients. And for me, finally, it's all around valuation, and this is where it just doesn't stack up at all. It's madness. Let me very quickly run you through the numbers on an absolute best case scenario. Generic drug manufacturers typically generate around 40 cents of sales for every dollar of assets they have, and these companies typically trade on an EV sales multiple of around 1.5 times. Keeping that in mind and using this logic, this loan should then generate around $300 million in sales. And at a 1.5 times EV sales multiple, we know that should add around $450 million to the enterprise valuation of Kodak, not the nearly $1 billion it has. What this also doesn't factor in is that Kodak won't be generating the same ROI, won't be generating the same profitability and margins that these competitors are until it's a lot more established and it's operating at an efficient level. And that will take some time. Furthermore, they're only manufacturing part of these generic drugs. So they're operating in a lower part of the value chain, ultimately meaning, again, they won't be generating the same profitability and margins. So in an absolute best case, one could potentially argue that you could see an increase in valuation of up to 450 million. However, in reality, this should be a lot lower, and we've discussed why that would be the case. So look, for me, it doesn't stack up at all, and it's just hype, and it's just madness. If anyone can explain to me why Kodak at this point is a really good investment, I would love to hear that. Please let me know. I'm really struggling to get my head around any alternative argument in this case. Now, if you're watching this video because you want to know how to identify the next Kodak and benefit from that massive growth in share price almost overnight, then actually it's surprisingly simple. All you need to look out for is some key indicators that can give you confidence that something is going on. Now, as part of researching this video, I've also found out that someone's made it even easier for you to do this. So I've put the link in the description below. Reddit user MalchecoYT has put together a guide on how you can also identify the next Kodak, and so I really recommend checking that out. Ultimately, there are really easy ways to do it using FinViz or Thinkorswim, but he has created a really foolproof guide there with pictures, so I think anyone can follow that. But if you have any questions, let me know in the comment section below. Always happy to help out. So thank you so much for watching. If you like the video, please smash the like button. If you like investing related content, then subscribe to the channel. And as always, let me know your thoughts and comments in the comment section below. But thank you so much for watching, and I'll see you in another video.